हेलो एवरीबॉडी। पिछले दिनों भारत की रिजर्व बैंक ने रेपो रेट में कुछ इजाफा किया है। आज की जो हमारी डिस्कशन है वो इसी संदर्भ में है कि रेपो रेट में किए गए इजाफे की सिग्निफिकेंस क्या है। सो इन दिस कॉन्टेक्स्ट वी विल डिस्कस टुडे दैट what is the significance of the increase in repo rate by the Reserve Bank of India in the recent days. Okay? So first of all, let us know that what is the increase in the repo rate. On 4th of May, the Monetary Policy Committee held an off-cycle meeting in which it was recommended to raise the repo rate by 40 basis points to make it 4.40. 4 मई 2022 को मॉनेटरी पॉलिसी कमेटी की एक ऑफ साइकिल मीटिंग हुई और उस मीटिंग में मॉनेटरी पॉलिसी कमेटी द्वारा ये फैसला लिया गया कि रेपो रेट में 40 बेसिस पॉइंट्स की वृद्धि की जाए और इसको 4.40 कर दिया जाए 4% से बढ़ा करके। सो फर्स्ट ऑफ ऑल लेट अस नो what is monetary policy and what is the purpose or objective of the monetary policy, right? So monetary policy क्या है, right? So monetary policy is such a policy that guides the supply of money by the central bank in an economy. So monetary policy एक वो पॉलिसी है जो कि किसी कंट्री के सेंट्रल बैंक को गाइड करती है कि इकोनॉमी में मनी की सप्लाई किस यू कैन से क्वांटिटी में होनी चाहिए, राइट? सो मॉनेटरी पॉलिसी हेल्प्स इन मेंटेनिंग प्राइस स्टेबिलिटी। ये कीमतों की स्थिरता मेंटेन करने में हेल्प करती है। एंश्योर्स द सप्लाई ऑफ क्रेडिट टू द प्रोडक्टिव सेक्टर्स ऑफ द इकोनॉमी फॉर सपोर्टिंग इकोनॉमिक ग्रोथ एंड अचीविंग फाइनेंशियल स्टेबिलिटी, राइट? मॉनेटरी पॉलिसी जो है वो इकोनॉमी के प्रोडक्टिव सेक्टर्स में क्रेडिट सप्लाई को इंश्योर करती है ताकि इकोनॉमिक ग्रोथ को सपोर्ट किया जा सके और फाइनेंशियल स्टेबिलिटी है जो मार्केट में उसको अचीव किया जा सके। सो इन दिस कॉन्टेक्स्ट आई कैन से दैट द ऑब्जेक्टिव ऑफ मॉनेटरी पॉलिसी, द ऑब्जेक्टिव ऑफ मॉनेटरी पॉलिसी ऑफ इंडिया is to maintain price stability, keeping in mind the economic growth as well. So very important point. So it means the primary objective of the monetary policy in India is to maintain price stability, right? So भारत में जो monetary policy है उसका जो primary उद्देश्य है वो क्या है कि price stability को maintain करना है, which is important for the investment and employment for the country, right? And rise in employment for the country, right? So अगर हम थोड़ा बात करें कि इंडिया में मॉनेटरी पॉलिसी को डिसाइड कैसे किया जाता है, कौन डिसाइड करता है और मॉनेटरी पॉलिसी की इम्प्लीमेंटेशन के लिए कौन रिस्पॉन्सिबल है। एज फार एज द डिसीजन ऑफ द मॉनेटरी पॉलिसी इज कंसर्न्ड, according to the monetary policy framework which was entered into between the Reserve Bank of India and the central government of India, right? Since 2016, the monetary policy of India is decided by a monetary policy committee. Monetary policy committee consists of 6 members, 3 from the central government side and 3 from the side of the Reserve Bank of India. The governor of the Reserve Bank of India is the chairman of the monetary policy committee, and each member or every member of the monetary policy committee has one vote, and in case of equality of votes, the chairman of the monetary policy committee has the right of a second vote also, that is the casting vote also. And it is important to note here that all the decisions by the monetary policy committee are taken by the majority vote, right? So it means monetary policy committee decides the monetary policy in India, and the implementation of the monetary policy, that is the responsibility of the Reserve Bank of India. So one more point which is important to be noticed here, that is according to the monetary policy framework agreement, the central government of India shall give the target of inflation to the monetary policy committee. The present target, that is the 4%, means the inflation has to be maintained. Inflation rate has to be maintained around 4% in India's economy, with variation of 2% on either side, that is on you can say positive or on negative side, means plus minus 2%. So in this case, we can say that the monetary policy committee has been given a mandate to maintain the inflation rate between 2% and 6%. So this is important, right? So it means the target of inflation rate is given to the monetary policy committee by the central government of India, and the inflation rate which we consider here for the monetary policy purpose, that is the CPI based inflation, means consumer price index based inflation rate. Okay, so this is about the we can say the monetary policy, a brief introduction about the monetary policy here. All right. So now the next which we are going to discuss, that is who decides the monetary policy of India. We have already discussed it, that it is decided by the you can say monetary policy committee, right? So as we have discussed that monetary policy committee, we can say monetary policy committee, which is abbreviated as MPC, right? MPC decides the monetary policy, decides the monetary policy of India, we can say. Okay, so this is an important, you can say, fact, right, which we should bear in mind. And the second is who is responsible for you can say implementation of the monetary policy, right? So as far as the implementation of the monetary policy is concerned, as we have already discussed, that the Reserve Bank of India is responsible for the implementation of the monetary policy, for the implementation of the monetary policy in India, right? And monetary policy in India. So this is an important point. Okay, so the next thing which we will discuss now, that why the present hike in repo rate, right? So first of all, let us consider about the repo rate, right? So as far as the repo rate is concerned, the repo rate is a rate at which the RBI extends overnight you can say funding facility to the banks right, against the collateral of government securities or other approved securities, right? So it means, first of all, repo rate, right? So as far as the repo rate is concerned, repo rate is a part of the liquidity adjustment facility, okay? Is a tool of or a part of the liquidity adjustment facility, which is known as the LAF, right? So liquidity adjustment facility is such a facility, right? So under which the RBI LAF, liquidity adjustment facility, is such a facility under which the RBI extends credit facility to the banks exercising repo options, right? Or we can say repurchase options, exercising repo options or repurchase options. Okay, so this is the liquidity adjustment facility. So now let us come on the repo rate, right? So as far as the repo rate is concerned, right? So repo rate is the rate at which the Reserve Bank of India extends credit to the banks to meet the temporary mismatches in their liquidity, right? So repo rate is such a facility, is a rate at which the Reserve Bank of India extends credit for a very short period, to the banks to adjust the temporary mismatches in their liquidity. So this is the one point, right? The next important thing is that as far as the credit under the repo option is concerned, right? So it is always against the securities, right? So credit under repo option is always against government securities, or approved securities, we can say, okay, or approved securities. Okay, so let us take it in a simple way. Let's suppose there is a bank A. Let's suppose there is a bank A, and you can say A has liquidity crunch today, right? So then what A will do? A will approach the RBI. A is a bank, right? So A has liquidity crunch today. So what A will do? A will approach the RBI. So in this case, right? So A will give the government securities or other approved securities to the RBI, okay, and in lieu of that, okay, RBI will provide funds to the bank A. RBI will provide funds to the bank A. So that means the securities are collateral against which the RBI has provided funds to A for a very short period to meet the liquidity mismatches of A. So this is what we mean by the repo rate, right? So the next important point for your examination purpose here, that in monetary policy, only the repo rate is determined, right? So what does this mean? This means that a monetary policy, MP for monetary policy, does not determine other rates such as, we can say, other rates such as reverse repo rate, and marginal standing facility rate, MSF rate, marginal standing facility rate, MSF rate, we can say, and the next is the bank rate. Okay, so these rates are not determined by the Monetary Policy Committee, right? Instead, these rates are linked to the repo rate, right? Instead, these rates are linked to the repo rate. Okay, so MSF rate and bank rate remain higher than the repo rate. Okay, higher than the repo rate. How much higher? 0.25, right? You can say 25 basis points, we can say, right? 25 basis points. So these remain 25 basis points higher than the repo rate. So that means if the present, we can say, repo rate, if the present repo rate is 4.40%, so then the present MSF rate, that is 4.65%. Okay, and similarly, the present bank rate is also 4.65%. The present bank rate is also 4.65%. Okay, so now what is the bank rate? Bank rate is the rate at which the banks borrow from the Reserve Bank of India for a longer period of time, right? So as far as the bank rate is concerned, so you can say under the bank rate facility, RBI provides credit to the banks without any collateral security, and it is for a longer period of time, as I have already mentioned. And marginal standing facility rate, regarding the marginal standing facility rate is concerned, it is the rate at which the Reserve Bank of India, you can say, finances the commercial banks, against collateral security. This is over and above the repo rate facility, right? Over and above the repo rate facility. And as far as the credit under the MSF is concerned, so that is equal to a bank can avail credit under the MSF facility equal to a certain percentage of net demand and time liabilities of the bank. So these were the various points, right? So now the next important point here, which is required to be mentioned, is that monetary policy, right? Monetary policy may be expansionary. Monetary policy may be expansionary, or it may be contractionary, right? Or it may be contractionary, we can say. It may be expansionary, or it may be contractionary, right? Contractionary. So as far as the expansionary monetary policy is concerned, so expansionary monetary policy option is usually exercised by the monetary authority of a country to support growth, economic growth, and raise the level of employment, right? So if the let's suppose, right? So if the central banker wants to support the economic growth and raise the level of employment, so for that purpose, what would be required? More investment would be required in the economy, right? And more investment would be possible only if the credit will be available at a cheaper rate, right? So more investment would be possible only if the credit is available at a cheaper rate, right? So when availability of cheaper credit is there, okay, availability of cheaper credit is there. So this is fact, right? So for the availability of cheaper credit, so what is important? That is the low rate of interest. Okay, low rate of interest. Okay, and therefore, to ensure the low rate of interest or to ensure the availability of cheaper credit in the market, so what does the monetary authority do? The monetary policy authority, right? So lowers the, we can say, lowers the benchmark rate or benchmark interest rate, right? So repo rate in India's case is the benchmark rate. So that means, in case of expansionary policy, the monetary policy authority, right? The monetary authority, which is the Reserve Bank of India, right? Lowers the monetary authority, which is the Monetary Policy Committee, right? Decides to lower the repo rate. Okay, lower the repo rate. So we can say when the repo rate is lowered, okay, when the reverse repo rate is lowered, when the marginal standing facility rate is lowered, when the bank rate is lowered, so then we will say that it is the expansionary monetary policy, right? It is the expansionary monetary policy. So when the repo rate is lowered, so we say that it is expansionary stance of monetary policy. As far as the contractionary monetary policy is there, so contractionary stance of monetary policy or the contractionary monetary policy is announced to, you can say, counter the inflationary trend, to counter the inflationary trend or inflation, right? Or high rate of inflation in the economy, we can say, right? So then what is there? So high rate of inflation may be due to the disruption in supply chain, or it may be due to the higher demand, right? So inflation means price rise. So price rise happen when there is gap between demand and supply, when demand is more than supply, or when too much money is chasing too few goods, we say it usually. Okay, so that means in such a case, right? So what the RBI or what the Monetary Policy Authority will do, the Monetary Policy Authority will try to suck or withdraw the extra liquidity, okay, from the market. Okay, so they will try to do this, right? To suck or withdraw the extra liquidity from the market, so the rates will be increased. Increase in repo rate, increase in reverse repo rate, increase in marginal standing facility rate, and increase in bank rate, right? So this would mean that the Monetary Policy Authority is exercising the contractionary monetary policy in the country, right? So that means, okay, so as we have recently discussed in this lecture, that the Monetary Policy Authority of India has decided to increase the repo rate. So that means there is the inflationary trend in the country. So that is why, right, increase in repo rate will help in countering the inflation in the country, right? So here it is given that why the present hike in repo rate. Okay, so three important points have been mentioned here regarding why the present hike in repo rate, right? So as far as this is concerned, so one is to counter inflation, right? So inflation is rising globally, and India is not an exception to this, right? So as far as the CPI-based inflation rate is concerned, CPI-based inflation rate in India, right? So in the month of March, 2022, it was recorded at the rate of 6.95%, okay, which is higher than the tolerance limits of 2% and 6%, okay. Okay, and then the April, right, which is higher than the 6% tolerance limit. And the CPI-based inflation rate, you can say in this April 2022, which has been released few days ago. So that is there. We can say, okay. So that is you can say 7.79%. So this is the CPI-based inflation rate in April. So that means inflation rate, okay, inflation rate has crossed the tolerance limit, okay, tolerance limit on the higher side, which is 6%. Okay, so it has crossed the tolerance limit on the higher side, which is, we can say, 6%. And one important point to be noted here is that according to our, you can say, this monetary policy framework agreement, अगर 3 क्वार्टर continuously जो इन्फ्लेशन रेट है वो टॉलरेंस लिमिट को पार कर जाता है, 3 क्वार्टर्स लगातार वो टॉलरेंस लिमिट से बाहर रहता है, सो हम ये मान लेते हैं कि द मॉनेटरी पॉलिसी ऑफ इंडिया is not able to deliver or has failed to, we can say, deliver, right? So it means if the inflation rate remains beyond the tolerance limits for 3 quarters continuously, so then it is assumed that the monetary policy of the country has failed to deliver. Okay, so this is the point here which is important, right? So it means there is rise in inflation, right? So rise in inflation, the biggest contributing factor in this, that is the Ukraine-Russia war. And due to the Ukraine-Russia war, there is a rise in the food prices, rise in the fuel prices, rise in the you can say that fertilizer prices, rise in the prices of other important commodities, like we can say rise in the prices of the cooking oil, also rise in the prices of many minerals and metals also. So the shipping costs have also been increased. So due to all these reasons, you can say the inflation is seen globally nowadays, right? So one point is that. And the second purpose of you can say hike in the repo rate, that is the quantitative tightening, right, by other major economies, right? So quantitative tightening means adoption of the contractionary monetary policy, right? So contractionary measure of the monetary policy, that is we mean by the quantitative tightening, right? So one term is quantitative tightening, which I have just explained, and the other term is quantitative easing, that is lowering the repo rate or benchmark rate, we can say, right, which leads to the expansion of the credit in the market, right? So quantitative tightening, because as I have already told that inflation has become a global problem. Inflation has become a global problem now, right? Due to the you can say disruption of supply chains, right, caused by the Ukraine-Russia war, right? So this is the one point, okay? And so in the wake of the rising inflation, because before the Ukraine-Russia war, there was the COVID-19 pandemic period, right? And during the COVID-19 pandemic period, so all the, we can say the central banks of all major economies adopted the expansionary policies, okay? Adopted the expansionary policies, which means there was the quantitative easing by the central banks of the various countries, right? So this is known as the quantitative easing. Quantitative easing was there. Quantitative easing, or we can say the accommodative stance of the monetary policy was seen. Accommodative stance means lowering of the benchmark rates, right, with a view to support the economic growth and rise in the employment, right? So it means accommodative stance of the monetary policies were there. Accommodative stance, right? So that was there. Expansionary policies were there. So now you can say after the world has still not come out of the COVID pandemic shock, right? And now the world is experiencing the, we can say the war, right? Which is the Ukraine-Russia war. Okay. Now the world is experiencing the Ukraine-Russia war. Okay. So the Ukraine-Russia war has caused disruption in supply chains, right? So it has caused a disruption in supply chains. And due to this disruption in supply chains, so what has happened? So inflation is seen globally, right? So due to this, we can say the inflation is seen globally, right? Inflation is seen globally. So we are seeing the inflation globally due to this. So what is there? Inflation. Inflation, right? Globally. So now to counter this inflation, right? So the central banks of the major economies of the world are increasing their benchmark interest rates. It means the central banks of the major economies of the world are, we can say, following the quantitative tightening, right? So as we can mention here that the US Federal Reserve, the central bank of the US, yes, okay, the US Federal Reserve has increased the benchmark interest rate by 50 basis points, which is the highest in the past many years. Okay, in the past many years. Okay, so this is an example, right? So US Federal Reserve has increased the, we can say, benchmark interest rate by 50 basis points, right? So now in the wake of this, so India also need to react. All right, so India needs to react. India needs to react, right? So if India fails to react, so then what will happen? It will affect India's economy in two ways. Number one, fall in inflow of FDI in India, or foreign investment in India. Okay, fall in inflow of investment, foreign investment in India. Foreign investment in India. Okay, in any way, whether it is the portfolio investment or it is the foreign direct investment. Okay, fall in the inflow of foreign investment in India. And the second thing is that it may cause capital outflow from the country. It may cause capital outflow from the country. So how is it possible? How can we say it that it may cause capital outflow from the country? Right, so because if the interest rates in US or other economies will be higher, okay, and India doesn't respond. So then investors will be attracted towards those countries like US and other countries where the interest rates have increased because they will, you can say, get more incentive on their investment in those countries because the interest rates are higher there as compared to India. So that is why the inflow of new capital in India will stop, and instead the existing capital would start outflowing from the country. Okay, so this is an important point. And the next thing is that is to ensure the macro financial stability, right? So macro financial stability is important, right? So we know that price rise, right? So a reasonable rate of inflation is good for, you can say, incentivizing the or is good for attracting the investment, right? So, but if the inflation rate, you can say, crosses beyond the tolerance limits or crosses beyond the prescribed limits, which are considered, which is considered reasonable rate, right? If it crosses that, so then it becomes a, you can say, signal of instability in the economy, right? So then the investors are, you can say, discouraged. They lose the confidence, okay, and they fear from investing, right? Because the higher rate of inflation, you can say, fails to attract more investment, and instead it leads to the capital flight from the country. Because when the inflation rate rises, so then what happens? Number one, the import bills also increase, right? Because with rise in inflation rate, the rupee depreciates. The real value of rupee falls. With fall in the real value of rupee, because India is a major importing country, so that is why India's import bill will increase. So with increase in the import bill of the country, it will cause stress on the forex reserves of the country. Number one, it will increase the balance of trade of the country. It will increase the balance of, you can say, it will increase the balance of trade means it will increase the trade deficit, right? So, and similarly, it will cause the, you can say, negative balance of payments, right? Increase in the negative balance of payments. Okay, this is there. And moreover, during the inflationary time, the debt burden over the country also increases because the value of rupee depreciates, right? So with the depreciation of the value of rupee, the dollar becomes dearer. And if we are to repay the debt and the interest thereon in the dollar terms, so then that will increase the burden over the country, right? This is the next point. And similarly, with the fall in the real value of rupee, so that means the real value of the savings also decrease, and the real rate of interest also falls, right? So with fall in the real rate of interest, obviously, you can say the investors in our country would like to invest out of the country where they would be getting more return on their investment in the real terms. So this is the point here, right? So with this, you can say the when the people are not getting any incentive for their savings because of the fall in the rupee and fall in the real interest rate, so then they would start investing in metals like gold, silver, or property, etc. So with that, you can say there would be the crunch of the funds with the banks, and no more money will be available for investment, or lesser money will be available for the investment. So in this way, this may threaten the macroeconomic stability of the country, right? And because with all these things, the economic growth rate would be challenged, right? And similarly, the it would become difficult for the country to maintain or to increase the rate of employment. Right? So this is why the present hike in the repo rate. So I hope this is clear to everybody. If anybody will be having any question or query or doubt, right? So you can mention in the comment box. I will try to address your problem or your queries. Okay. So next is, what about the growth prospect? We have already discussed that the objective of monetary policy is to ensure or is to maintain price stability while keeping in mind the economic growth also, right? So जब हमने रेपो रेट इंक्रीज कर दिया है जस्ट प्राइस स्टेबिलिटी को इंश्योर करने के लिए, इन्फ्लेशन को काउंटर करने के लिए, तो फिर ग्रोथ का फिर क्या होगा, राइट? सो यहाँ कुछ इंपॉर्टेंट पॉइंट्स हैं विच आर रिक्वायर्ड टू बी डिस्कस्ड. सो वन पॉइंट इज दैट domestic economic activity in India is progressing because our imports are increasing, right? And overall demand is increasing. Domestic economic activity is progressing. Contact intensive services are benefiting from pent-up demand. So here two important terms are there, right? One is contact intensive services. Contact intensive services are those services which are likely to be affected the most in the adverse times. जैसे अभी कोविड पैंडेमिक आई, तो कोविड पैंडेमिक के दौरान राइट कौन सी सर्विसेज जिनके ऊपर सबसे ज्यादा एडवर्स इफेक्ट पड़ा, वो कॉन्टैक्ट इंटेंसिव सर्विसेज होती हैं, राइट? सो ऐसी सर्विसेज कौन सी होती हैं? जैसे वी कैन से हॉस्पिटैलिटी सेक्टर हो गया, राइट? ब्यूटी एंड वेलनेस हो गया, राइट? क्लोथिंग हो गया, फुटवियर परचेज हो गया, राइट? एंड टूरिज्म हो गया, एविएशन सेक्टर हो गया. सो दीज आर द सेक्टर्स विच आर you can say supposed to be affected the most by you can say adverse conditions in the economy, right? So pent up demand. So what do we mean by the pent up demand, right? So pent up demand means that demand which the consumers put on hold during the COVID-19 period in the country, right? So because when there was a COVID-19 pandemic, right, because of the economic hardships, right, so the consumers preferred to put some of their demands on hold, right? As I have already discussed, tourism, right, tourism, and then we can say this hospitality, clothing, beauty, wellness, etc., right? So now that demand is picking up. So pent up demand is picking up now, okay? In this sector, particularly contact intensive sector. So next is a forecast of a normal southwest monsoon in the 4th consecutive year, right? So चौथा साल है कि continuously हमारी जो साउथ वेस्ट मानसून है वो नॉर्मल चल रही है और इस साल भी नॉर्मल रहने की संभावना है. साइंस ऑफ रिवाइवल इन द इन्वेस्टमेंट साइकिल, राइट? सो इन्वेस्टमेंट साइकिल है हमारा जो वो रिवाइव कर रहा है. इसके हमारे पास संकेत क्या है? दैट द इन्वेस्टमेंट साइकिल इज रिवाइविंग, राइट? सो द वन थिंग वी कैन से दैट इंक्रीज इन डिमांड, this is the one point. And the second thing is that increase in production of capital goods, increase in production of capital goods in the economy, capital goods, okay? And the third important point is that increase in imports, okay? And the fourth important point is that increase in exports as well, okay? So we can say, seeing all these things, we can say that the investment cycle is reviving in the country, right? And moreover, there are the new market opportunities which are opening up for India due to the geopolitical conditions and recent trade agreements, right? So first of all, we know that India has entered into, you can say, trade agreements with the UAE and with Australia also in the recent past, right? So with the trade agreements, obviously India's trade with those countries would pick up. One is this point, and the second thing is that due to the Ukraine-Russia war, right? Geopolitical conditions, Ukraine-Russia war. Okay, so there are chances of opening up of new, you can say, markets for India, right? So the main thing is that as far as the wheat is concerned, because Russia and Ukraine particularly was the major wheat supplier of the world, right? So with the war there, so it is not possible for Ukraine to export its wheat now. So therefore, many countries of the world are looking towards India to purchase wheat from India, right? Though in very recent days, the government of India has banned the export of wheat from the country with, we can say, immediate effect, right? But if the government would like, right, and if the government would, we can say, assess that we have the sufficient, you can say, quantity of wheat in our country, and export of wheat is not threatening to the food security in India, so then the government may decide to export the wheat to various new markets. For example, Turkey, Egypt, Indonesia, and other countries are there, Israel, and more countries are there. Okay, so this is the point here. Okay, so now the next important thing which we will discuss now, right? So that is monetary policy still accommodative? So here the one important point to be discussed is that what do we mean by the accommodative monetary policy? Okay, so as far as the accommodative monetary policy is concerned, we mean that a monetary policy which supports economic growth, and helps to maintain or increase the level of employment. Okay, increase the level of employment in the country. So such a type of monetary policy is known as the accommodative monetary policy. Okay, so that means accommodative monetary policy is that policy where the benchmark rates, right, like we can say the repo rate is lowered, right? So where the benchmark rate or the repo rate is lowered, right, to increase the, you can say, credit flow in the market, right? So that is the accommodative. So now the point is that is a monetary policy still accommodative? India's monetary policy is still accommodative? The answer here is yes, it is still accommodative. Okay, it is still accommodative. The current rise in repo rate is only the withdrawal of some of the ultra accommodation that was provided during the COVID-19, right? Actually, in February 2019, before the COVID pandemic started in India, the repo rate was more than 6%. Okay, repo rate was more than 6%. Okay, and now it is only 4.40%. Right. So from this we can say that the repo rate, you can say the repo rate is still lower than the repo rate of the pre-pandemic times. Okay, so the repo rate is still lower than the repo rate of pre-pandemic times. Pre-pandemic times, right? Actually, क्या था कि during the pandemic, pre-pandemic times, right? Actually क्या था कि during the pandemic, right? हमने अपनी मॉनेटरी पॉलिसी को थोड़ा एक्स्ट्रा अकोमोडेटिव बनाया, अल्ट्रा अकोमोडेटिव बनाया। क्यों बनाया? क्योंकि पैंडेमिक के दौरान इकोनॉमिक एक्टिविटीज राइट केम टू हॉल्ट, लॉकडाउन थे, इकोनॉमिक एक्टिविटी केम टू हॉल्ट, सो दैट इज व्हाई राइट। सो एट दैट टाइम हमने अपनी जो मॉनेटरी पॉलिसी को थोड़ा अल्ट्रा अकोमोडेटिव बनाया। हमने रेपो रेट था जो उसको गिरा के यू कैन से 4.404% तक हम ले आए, राइट। तो अब हमने क्या किया है, जो हमने वो अल्ट्रा अकोमोडेशन की व्यवस्था की थी ड्यूरिंग द कोविड पैंडेमिक पीरियड, सो नाउ वी हैव जस्ट withdrawn a part of that ultra accommodation, and the repo rate of the repo rate in India is still lower than the pre-pandemic times. So in this context, we can say that monetary policy in India is still accommodative, right? So ये जो आपका टॉपिक था, this is important for UPSC Civil Service Examination General Studies Paper-III, and इसमें से कुछ क्वेश्चंस आपके प्रीलिम्स एग्जाम में भी पूछे जा सकते हैं, राइट। सो मुझे उम्मीद है कि आपको इस लेक्चर की अच्छे से समझ आई होगी इस टॉपिक की। अगर फिर भी किसी की कोई प्रॉब्लम हो तो आप कमेंट बॉक्स में अपना डाउट, अपनी क्वेरी, अपना क्वेश्चन लिख सकते हो। सो मैं डेफिनेटली आपके उस क्वेश्चन की, आपकी क्वेरी को एड्रेस करने की कोशिश करूंगा, राइट। सो थैंक यू वेरी मच, स्टे हैप्पी, स्टे ब्लेस्ड, एंड फिर मिलेंगे। सो धन्यवाद।